let Steve and Andy take over. Hey, Steve, Andy, what's going on?
Not much, just a little noisy, aside from the jet across the street at Miramar. Hello, Andy. Hello, everybody.
Hey, Steve. Hi, Scott. Hi, everybody.
Yeah, so disclaimer this week, here at the home office, the roof is being replaced, and as luck would have it, they seem to be working right over the room I'm in. So if you hear any banging and all of that, nothing I can do about it. Just turn your volume down, and I'll try and work through it as well. So welcome to the March 30th Tuesday webinar, Trade of the Week. Just a reminder that Andy and myself do work here, but we've also been trading a long time, have our own accounts, and have our own opinions. So nothing you see or hear really is to be construed as official financial advice. You've got to hire the brokers to get that valued opinion. And so, as I said, we've been using the product a long time, and the learning curve can be challenging for some people, but we try not to make it so challenging because we have a lot of ways to give you immediate visual access, especially live in Barry's room and also the noon sessions every day. We start up again at the noon time, Eastern time, and on the YouTube live stream that we offer, one of the 5 or 6 of us will show up and help people with questions about the program, the platform, whatever you want to talk about, we're there for you. We do our best to answer questions in these afternoon webinars, but mostly the content in the afternoon webinars here is kind of already predetermined. But if you're not available, let me rephrase that, if you have not been able to take a look at Barry's room, it's free, and there's really, you can't argue with a good price like free. And there's the daily support there at the bottom, that live trade-ideas.com/live is a redirect. It takes you directly to the support live webinar on YouTube I was talking about a moment ago. All right, so quick jaunt there through the slide deck, and takes us to our theme, as always, the world we live in, and it's certainly applicable here at Trade Ideas and in the markets. Humans and machines working together. You know, we just can't do it without the other. Andy and I used to trade before Trade Ideas, and when we sit back and think about it now, I don't know how we did it. We basically just followed a bunch of monkey lights around, things making new highs. That was about the extent of our excitement. Things making a new high, and some other little esoteric things. And then came Trade Ideas in 2003, and it really just focused all your attention, whether you're a swing trader or a scalper. It was a quantum leap for working together. So humans and machine, and then, you know, as Andy talked about a lot in the AI segments, the value of our AI is in the entries. So we are better managers of the trade as more data comes to us in real time, and we can deal with those nuances. All right, so again, not going to be a long one today for a few reasons, but we've got a lot of things to talk about, and we will get to the trade of the week, which is active and hanging in there. Not really too much reason to get concerned, but I'll talk about that in more depth. So I'll start with, as usual, the market recap. Let's minimize that. All right, S&Ps. As I was talking about yesterday in Jamie's webinar, if we kind of start from the good and start with the good and work backwards, we start at the Dow, where we've been noticing the rotation into value plays and safety and dividend paying stocks and just your grandfather's type of stocks. That has been what's been strong lately. Then we work backwards a little bit into the S&P, and there's really no reason to be bearish here. We've got a continued kind of a cup and handle look there. I know I mentioned a week ago that I was looking for some consolidation, and let me grab my pen, looking for some consolidation, but it got a little deeper than we thought and then bounced right back up into place. So we're really no better off here than we were a week ago. And that is really showing up in a lot of traders we've been talking to. I'll hit more on that in a moment. But so the S&P is not going anywhere. It's still above all averages, but it's just kind of sitting there. And then we get down to the Nasdaq, which is starting to, you know, deal with a flattening 50-day moving average here. To me, the 50-day moving average is kind of a sign of health. If you're above it, you're healthy. If you're below it, you're kind of unhealthy until you can prove yourself again. And were to prove itself again, I'd like to see it get back above here, but it's kind of losing its luster after a couple of really good attempts to get above that 50. It just couldn't do it. So that is in the back of my mind weighing heavily. And one of the reasons I'm not long a lot of things, I'm long a few things. Nothing's really working that well, but certainly not leveraged, not using margin. I'm not short anything. I'm just kind of sitting here and waiting, trying to see what is going to start working. Lastly, in terms of the indexes, we've got the Russell 2000, the small cap, and again, the same situation over here. After poking its head up to all, to a nice high, it too is being challenged by the 50-day moving average, which is starting to flatten out over there as well. And as we all know, it was kind of a fun October, November, December over there in small cap land, but that bloom is starting to fall off that flower as well. So I mentioned that trading has been challenging for sure lately, and I want to bring up something here. What's the one I'm going to bring up? There we go. All right. So when I see people like Trader Stewie, I'm kind of hoping this GIF comes through here on the webinar, but this is a very well-respected guy. He runs a service, and I like him. He knows how to read charts, and he provides tremendous value out there. And you got a guy like this who's been around a long time, putting out GIFs saying trading in this market right now. It's walking through a World War I trench there. Bombs are going off left and right. You don't really know what's coming next. Everybody looks a little shell-shocked. And then you start to read some of the replies, and everybody's kind of chiming in. Yeah, my God, I thought it was just me. Oh, I'm glad to hear it was not just you. I've been sitting on my hands for 2 weeks. I'm on the sidelines. So, this is what I feel. This is what the guys have been talking about here, and that's what I'm seeing out there in the real market. So if you're having trouble right now, you're not alone. It's not easy at the moment, and that's why it's always really good when things are working well to make hay when the sun shines, is the old trader's or farmer's almanac, and you can certainly apply that to trading. And Randy might talk about a few things. He had, I think, an interesting call today in the EV stocks, electric vehicles. He noticed a lot of them were kind of moving higher, and Ride is kind of the one that I've liked for a while for a few reasons. And it kind of tapped on a possible double low there and didn't want to break and got a little lift at the end. But there's really no reason to point to of anything we usually talk about to jump in a stock like this, other than the fact that kind of what we've been doing lately just really hasn't been working. So we're looking for good, low risk, higher reward, type of entries. Anything you want to add to the market commentary and what we're seeing out there right now? Thought you might have a couple of comments.
Yeah, no, I totally agree with you, Steve. It's hard right now. It looks like the stuff I'm trading, like the really Box, for example. You take a stock like Box, and with a very nice setup, and it's still set up nicely, hanging above. I'm sure Steve will talk about that in a minute, but it's like pulling teeth trying to get these things going. Even the beautiful ones that have a nice setup, there's just no follow through. And the ones I've been making money, most of you guys know I'm not afraid to bottom fish, but like that Ride, for example, I bought today. Also Fubo, I bought yesterday off the 200-day moving average. Now I'm basically about flat in it. I was up today in it, but anyway, it seems like the ones where I do my little bottom fishing, I stand a much better chance to make a little money than the ones that have these really nice setups. I'm just not seeing a whole lot of these setups continue with any follow through, and I think most of the guys here at Trade Ideas are seeing the same thing. So I can't tell you, and I know you've heard this from all the gurus, talking about sitting on your hands, and some great quotes out there about Jesse Livermore making his money while he's sitting, not in the game pounding away. So it's hard to do. It's hard to, I don't like to use gambling references, but it's almost like sitting at a blackjack table and watching everybody else play. But sometimes you got to do it. You really need to do it, because I'm just not seeing a whole lot of opportunity. And you'll see, and we're seeing the same thing in the AI as well. When I take over the screen here, you'll see the same thing when I go through a lot of the AI trades. But no, Steve, I agree with you. To be up here at all-time highs and real close to it in the diamonds and the spiders, I really don't like what I'm seeing in the overall, Maybe that'll change. Maybe we get a big gap in the morning and everything goes crazy. So, but anyway, we'll see.
Yeah, it seems like, you look over, the SPYs are up 1% or whatever on the day, but seven out of the eight swing trades you've got going are red and down 2 and 3%.
Yeah, exactly.
It just seems to be the case. And so, it comes to a point where you're like, okay, I'm just going to sit back and reassess. And like Andy said, watch a little bit, watch the jump rope out there, see what's going on. And, it's easier said than done. And it's one of the reasons it's very difficult to trade for a living, because, the rent doesn't care that you've got to make money in the market. And sometimes that's a detriment to yourself. When you've got to pull money out of the market, you start forcing things that you shouldn't be doing. So there's many nuances to this game, but we're just trying to share kind of with what we've been feeling and seeing out there as well, because you guys are probably not alone.
Exactly.
All right. Well,
all right, Steve, I'll take it over. And okay. And just to add some color to what we were just talking about, this is something I built and shared last week. If anybody wants it, just let me know and I'll drop it for you. But if you didn't get it last week, but it's a compare count, and I decided to stretch it out and do like when you get in these markets where they're just kind of hanging out in the middle of a range. I want to get an idea of what's on the 20-day high versus 20-day low. And look at that, it's pretty even, Steve, in there on stocks hitting 20-day low versus 20-day highs. So it's, when I start seeing things like that, I just say there's just no true direction. And you're going to see it right now as I talk about at Holly. Holly came to play today with about an even number of longs versus shorts in all the strategies. And if you look here, it looks like, Holly alerted us both on shorts and longs, almost even. Looks like the shorts may have outnumbered. And as I go through these just one after another, it's very similar to what I'm seeing in the market. Just a lot of slop back and forth with no follow through. And it's just amazing. Just each one of these, it's just, no direction. That one had a little bit of direction today, but that was one of the few. Coles, pretty much slop. Seeing a lot of this, guys. I'm not going to go and break down Holly for you today, because like a lot of models, a lot of algos out there, when you get in a market like this, it's hard to make money no matter what you're using. Another great example is my extreme volume high-low pro. In a bull market, typically this thing is going to probably, the green color ones, in other words, the longs are going to outweigh the yellow color one, which are the shorts. Stocks that are down 1% versus stocks that are up 1% and going on huge volume. But as you look through, this goes back to my time, right when the bell rang this morning, you're going to see a lot of yellow in here. And then you're going to see a few green, but it's not what you're accustomed to seeing in a bull market. Typically, you're going to see a lot more green versus yellow. So that's something where you can just kind of quickly, with the glimpse of your eye, keep an eye on that, and you can just kind of almost watch the colors and get a feel for, what's kind of happening in the marketplace. And from what I'm seeing, it's just messy right now. And if you can afford to, like Steve said, if you're not trying to put food on the table, well, even if you are, okay, the month's almost over, right? You got a fresh new month starting in a couple of days here. Just, see if things don't change for you here in the next few days. Me and Steve's always talking this market needs a good bath, and I still believe that, because if we get an up move through all-time highs, I think it's just going to be a creepy crawler, but maybe not. We'll see.
One of the other things we kind of failed to mention in our market recap is the rotations have been so quickly. What's in favor one day is almost in favor before the next day even starts. Exactly.
Good point, Steve. Today, I told the guys, watch the banks today, because the dollar was up, dollar was strong, financials did good, but tomorrow they could be at the bottom and oil will be back on top. So when you start seeing things like that, that makes it tough. Unless you're a day trader, catching the right stuff. And even that's been tough today. Recently. All right, Steve.
I saw, Chris McKay earlier saying, I like this entry right here. And I pulled the stock chart up. He's a day trader. and it was completely opposite of the move it had just had 60 minutes prior. And I said to myself, I like that. Because that's pretty much all that works right now. If you want to chase 7 or 8 green candles on the intraday, well, you might be disappointed. Anyway, you got to think opposites right now, opposites in short time frames as well. All right, so the trade of the week box did trigger right on the open yesterday. And sometimes what I like to do is kind of start with the look that it gave us. And there it is. There's the look that it gave us going into the weekend. It had been off and on a couple of scans, as I mentioned. Nothing, the one we're going to talk about next, it was on there at some point and is on there now. But that's the kind of look that has been working for us. And, you know, I'll admit it, we're kind of going back to the well, continuing to see if these can work for us, because I don't really have any better ideas at the moment. And so this was a great looking stock that got ahead of itself on good volume and has held up again over the 10-period moving average, which is really what I try to base a lot of for the last year of these trades on. Stocks moving higher on good volume, moving sideways into that moving average. And I also talk about, I like it when it reaches down and touches that moving average, maybe even once or twice, like you're on a step ladder and you reach down and you're on the roof and you feel the firmness of the ladder step. Okay, you got your footing, you're ready to move higher. Well, I kind of would have liked to have seen it do that yesterday on this candle. Kind of would have liked to have seen it do it today on this candle, but as Andy and I mentioned, any follow through just seems to be kind of negated before it even can kind of get a hold of itself. Another thought, and again, I'm in this trade, and another thought of how I'm going to manage it. Let's go to where it is, the actual instructions. The risk management is very tight here, okay? And it's to, as usual, not let the price close. Operative word right there, close, under the rising 10-day simple moving average. Well, we didn't get that today, thank God. We got kind of a reprieve at the close and a nice little wick bouncing off of the lows and off of that 10-day moving average. So in a sense, we're still in the game here. We didn't post a close below. We didn't have to make that decision at the end of the day to get out for, a pretty tight range there, 23.57, 20, less than $1 really. So, and that's good because as we've talked about, we don't want to give this market too much confidence or, too much credibility. We want to really be on the defensive here. And what I'm going to say next is kind of going to go not against the directions, but again, as things develop, we now have 2 new days, and we as human beings, as I said earlier, can manage the nuances of these trades better. Well, and also saying that I wanted to see this trade go the last 2 days, I'm starting to get wear a little thin. Not really interested in giving this thing too much more opportunity to disappoint. So this thing really needs to open tomorrow and get going. If it rolls over and starts taking out today's lows, in light of everything we've been talking about, the lack of follow through, and just the general noisiness of the market, I'm probably just going to cut this. And I hate to cut trades in the first half hour of the day, but this thing's kind of disappointing. It still looks pretty, and it still has every opportunity to move higher above that 23.66 level, let's call it tomorrow. But if this thing wants to start, trading below 22.70, 75, I'm probably going to get out because I'm not giving anything the benefit of the doubt right now. I'm just seeing too much difficulty. I'm hearing about it. That's why I showed you that kind of that snapshot of what the group is thinking out there. So these trades have 0 tolerance right now. We're not going to give them too much leeway. If it didn't go today, didn't go yesterday, I'm ready to cut it quickly tomorrow and just call it, a 70-cent loss and move on. All right, so let's see what happens tomorrow. And you really love to see it get going out of the gate. If it wants to play around and play footsie, it's had every opportunity to test on, to step and test on this 10-day moving average. One more day, I'm probably not interested. And so that's the way I'm going to play it. All right, have any questions I need to address there on this one?
No, it looks pretty good.
Mm-hmm. Yeah, I mean, and guys, I'm going to continue to try and call for these things until, they just don't work anymore. They're still working. I still see some of them working out there. And we'll see. But if not, it might be time to start, looking for different types of setups on different types of scans. Maybe more of those value plays, revenue growth fishing, or bottoming, basing type of charts. Because for the last, week after week, month after month, we've been going after strong stocks with strong scores, with strong trends, moving sideways on their moving average, and that works. And the hardest thing to do in trading is to recognize when what was working is no longer working and then pull the plug on that. And that's kind of where we could be right now. I don't know. We're going to let box play out and see if this is the kind of setup we're going to want to look for again this weekend. All right, so as I mentioned, these are still the most interesting setups, the ones that go sideways, that are strong. And I kind of almost forgot, I created this scan over here called Above All SMAs, Tight Range. And, let's see here, let me do something real quick. Wouldn't you know it? Oh, there it is, box is on there right now. So I thought it might be worth a little while going through the contents of this scan just to kind of show people how we might try to find things that are strong and moving sideways and yet are above all the key moving averages, but not too far above. And you'll see that here. So let's open this scan up and then we'll go through it and see if we find anything interesting, but let's look under the hood first. So we're looking for ideas that are above $5. Okay, so here's the first filter that could be of interest, 5-day range. All right, now you heard me talk about I like the sideways action, the tight range. Well, we have to assign some sort of value, and I put a maximum of 10% in there, and that still seemed to have caught a 5-day range because it did not exceed 10%. We don't want to see really wide ranges, and we might come back and adjust that, but that's one of the key filters for trying to get this type of a look on these stock charts. For those that don't know, this little hack right here, earnings per share, putting a negative on this side and a positive on this side, basically tells the system we only want to see stocks that have earnings, be it negative or positive, and that way it'll weed out all the ETFs and warrants and things like that, hopefully. Okay, change from the 10 SMA. Notice the 10, 20, and the 50 and the 200 all have a minimum of 0.01%. All that's saying is you've got to be above all four of them. It doesn't necessarily say where they have to be or if they're crossed or if they're rising, but generally speaking, if you're above all four SMAs, likely they're going to be kind of fanned out. But I also didn't want the price to be too far away from my key signal line, the 10-period simple moving average I talk about. So I put a maximum of 4% in there, just so things don't get too far away from that. Again, I like to see things that are close and leaning and putting their foot down on the line of the 10 SMA for support. Change in 5 days. Well, this one also could probably be worked with. You could maybe put a value of 1 or 2% in there, but what I have is a value of 0%, meaning over the last 5 days, this hasn't gone anywhere. It can be negative, but it can't be positive over the 5-day change. What else do we have down here? This is something that could be also worked with, I suppose. Position in year range. That just means it's at the 75th percentile of a 52-week high, kind of in the top quarter of that range, and then average daily volume. So, I'm sorting these by price because I think most people kind of like the smaller priced ones first, and we would just go through and I'd show you the ones I would like and see how I would probably mark them up. That's actually not that bad. Let me bring this down so we can see what these things are in my single stock window. Okay, capital investment. That's not bad. That's kind of a decent looking wedge there. Well, that's the kind of thing that if you're aware of and prepared for, it could resolve itself higher. Yeah, it's okay. Not bad. There's our friend Box, still probably the best looking one on there that I see. Oh, I like that. What's this? PPL, a lot of good volume. Oh, electric power distribution, huh? Well, what I see is just a really defined coiled corner. This is like an animal being painted into the corner there. That's kind of what I want to be scanning for on this. Ideally, it resolves itself in that direction. So when we find something like this, basically just maybe look at, it depends on where you want to put it. I'd say I'd probably put it right there. Right click inside the chart, and then you turn this into a price alert. And if this thing wants to move above that blue line tomorrow, I'm not going to miss it in real time. Yes, Marcella, it will be recorded. Look on our YouTube channel tomorrow for the recording of that. And I will, of course, share any scans that we talk about in our YouTube. Yeah, Jeff was looking at PPL today. So Jeff already had an eye. He kind of saw that. So again, guys, we're looking for stocks ideally. So far, PPL and Box, our trade of the week, still kind of look the best on here. We're looking for kind of coiled springs. Not all of them are going to, look that good. So now we're starting to get into the 40s and $50 ranges here. Nothing else is really sticking out. Foot Locker, okay. So as I mentioned, what I wanted to do next was show you some of the things you can do. You don't just take the scan, for gospel. That doesn't look bad actually. So there's what are some things we could do to maybe open it up and get some more ideas. So first thing I'm going to do is I'm going to take that 5-day range and maybe crank that down a little bit. Maybe we'll make that a maximum of 7% over the last 5-day range. What else could we do? Maybe we could change from the 10 SMA and bring it even closer, no more than 2% above 10 SMA. Maybe we could open up our position in the year range a little bit, maybe make that just above the 50%. So everything above the halfway mark might work. And with those two changes alone, we might get a whole different look. Oh, we really shaved that list down, didn't we? Interestingly enough. Yeah, so maybe even shaved it down a bit more than we really wanted to. There's our favorite PPL still on there. But for whatever reason, those are some of the things that you would first go to try and open up, or in this case, we didn't open up, we actually made it tighter. But let's see if I'm missing any questions here. When looking at this type of chart, is there a way to compare it to the associated ETF? Yeah, Joe, so that's a good question. So, okay, electric power distribution. Well, I think the closest thing we would call it to that would be an energy stock, and we would have the
utilities.
XLE.
No, XLU.
Okay, XLU. Going to look something like that.
Pretty strong sector.
Yeah, there's no way to do it automatically, but you just got to kind of know. And we are going to go through some sectors here in a minute, just for the sake of it. But I'm starting to think in my mind that I just want to keep an eye on these types of setups that we've been looking for, the boxes and those types of setups. And if they're not going to work, then it might be time to really, go to the drawing board and start figuring out what's a better way to try and approach it. I know Andy's got some ideas about maybe, like he said, he's been buying more beaten up stocks lately, looking for a better risk reward, because when those fail, they're not exactly failing very hard at all. All right, let's see. So I think what we'll just do is we'll move into, we did above all moving averages. Let me drop that in there in the original iteration. Let me go back and change that back to what I had originally, because there was more interesting ideas on there, I think.
Chris had a good idea while you're doing that. Okay. He said you can look at the single stock window if you're looking for the sectors, yeah.
Exactly, so that's what I did. I looked up the single stock sector. I looked up here and I saw, oh, well, it's gone now, but PPL, or was that what it was? Was it PPL we were talking about?
I thought it was, yeah.
Yeah, so I go up here and you just look at the single stock window, electric power distribution, and then we'll look at my sector window there in a second. But as soon as I share this scan, if anybody finds any value in it, I will share it, and then we're going to go on to the sectors and kind of see, when I look at the sectors, to see what we need to pay attention to tomorrow, what looks like it could be ready to receive the baton for tomorrow. Did you already drop something in there? You did, didn't you? Yeah, okay. And so this is going to be above all moving averages. And here comes my contribution to the chat window. All right. Yes, I'm going to share that too. I will share that, but here's the deal. When I share the sector window, you're not going to get the contents of that unless I will send that first. That is the sector, but you'll notice there's about 32 ETFs in here that you have to come into, go to symbol list, and point towards. My list is called ETF, and you go here, you find it, and then you enable it right there. you're going to have to do the same thing. But what I'll do is I will give anybody who wants those, because we're going to go through each and every one of them now. I'll give you that list of the, how many are in there, 32 ETFs. And you can just copy and paste and drop them in and create your own symbol list folder. And then as I go through these here, we'll finish off as always with any chart you guys want to look at. Maybe you guys will find something you want to show me that I haven't seen that looks really good and we need to take a look at. Or maybe I'll be able to give you something that might not be something you want to look too much harder at. Either way, it's always a good exercise to go through. So while I'm going through my sector list, you guys can type in a few symbols if you want, and we'll take a look at them. We're going to start here with, I only want to look at the daily charts, and so we're going to go to the solar sector. All right, a lot of beat up sectors here. Although I'm going to say the solar sector looks like it's trying to turn it around. 1 day or two a close above that declining 10 and 20-day moving average might be the beginning catalyst for something. That 200-day moving average is coming up underneath it. What is this? This is, oh yeah, the regional banks that Andy said he thought might be strong today. Well, they couldn't quite fight their way through the declining 10-period moving average for the second test, but again, a lot of sectors are going to look like that. I don't know if we're going to find too many that are going to be looking too strong, but nonetheless, today it was strong. Well, there's one. Jets technically did close above, so the airlines ETF is Jets. And a lot of the stock charts in that industry will probably look just like this one today, but the beginning of possibly something there, not bad. And then the other banks, again, retail, again, look at these things. They're all just getting really, really hit hard with the headwinds of these moving averages that are curling and rolling over onto them. Let's see if we can, oh, well, there you go. That's the best looking one we've seen yet. For whatever reason, higher interest rates or not, the home builders are quietly running away with it. What's going on over there, Andy? You got any thoughts on that? Jeez, look at that. I didn't see that one coming.
I just think people are trying to get out of the risk, getting into risk assets and away from the fiat currencies. So they're buying up all the homes.
Buy themselves a rental.
Yeah, exactly. Yeah.
Second income property. All right, steel. Okay, that's another good one. A lot of talk of infrastructure, X Steel and Cliff Steel. Pretty good sector as well. So steel and XHB, home builders, probably a lot to do with the infrastructure bill talk and the giant price tag that's being thrown around. So that would make sense. All right. China, oh, look at that. It's trying so hard to hold on to its 200-day, but it's just waiting for something to upset it. I don't know. It's not really a vigorous bounce there. We looked at the IWM earlier, Russell 2000, under the armpit here, under pressure. Doesn't look anything like home builders or steel, that's for sure. Well, there you're right, correct, Andy. In the XLFs, not so much the banks, but the XLFs are spending 3 days now above those key moving averages. Not a bad deal over there in XLF land. So far, home builders, steel, and financials are paving the way. Another downtrend in treasuries, broker dealers, people discovering that trading is maybe not as easy as they thought, and pulling back on the trading. Agriculture, interesting, kind of hanging in there. Software just falling the same victim as the Nasdaq and the Qs. Another ETF for China. And this one is really perplexing. I can't figure it out, but it doesn't matter what I think. You know, we've got a couple business parks here where I live, and they've been empty for the last year. All right, okay, a lot of businesses are closed. Half the strip malls might not even be open. But for some reason, the IYR, Commercial Real Estate REIT, wants to look as strong as it looks right here. Look at that. Maybe it's the dividends that people are chasing. Maybe that's it.
Yeah, probably so. Yeah, it's going to trade with.
Yeah. All right. Okay. So semiconductors totally under pressure. Looks just like the Nasdaq. Dow. We looked at the Dow SPY. OIHs were strong last month, but now they're under pressure again. Oil. Biotech double testing that 200-day moving average. Nasdaq. We looked at that. Energy hanging in there, just kind of sliding. Healthcare popping back above all key moving averages. Interesting. Gold is just horrible. Somebody saw a comment today. Market goes down, gold goes down. Market goes up, gold still goes down.
Yeah.
Oil commodity, hanging in there. Silver following the same fate, and the miners. All right. So to recap, And going into tomorrow, the home builders look strong. Steel looks strong. And what was the other one? It was IYR, for whatever reason. IYR, commercial real estate, looks strong. Go figure. All right, so let's go work our way through here some stock charts, make sure I don't miss any. Who's the first one, Andy? Is it
let me scroll back here.
VVR? No.
I've talked about that FVVR.
Okay.
You can take a look at it real quick if you want to. Just kind of
So we'll
show.
start with that one,
just,
then we'll go to Snap.
Just saying, it's nice support on the daily time frame. If you drew a line there, you'll see it.
FVRR. Oh yeah. Okay. Good
It even
support
goes
there.
back further.
183.
Yeah.
All right. So we'll look at a few names here. See if anything steps out. Snap, I got to say, looks very much under pressure. It's totally in no man's land. However, price-wise, if you want to get really hung up on the support level of 48, it looks like it's trying to hold 48. A close below 48 would not be healthy. All right, I'm glad you're asking about these because these are some EV stocks. Nikola has always been kind of the black sheep of that whole group. But maybe it's really finding some support here as well, kind of like Ride was here at 13. You know, low risk, low entry, kind of like we were talking about, Joseph, earlier. FUV, same kind of a thing. You know, close enough to that 200-day, kind of tried to wash out that low. We'll see if it builds. Again, Andy and I both picked up some Ride today, which is part of that same space. We'll see what happens over there. General Electric, haven't seen that name in a while. Oh, not bad, actually. You know, we just looked at a bunch of sectors. We would have said that one looked decent, and what I really see here is just kind of the bigger picture, something more like that. So nice, big, broad flagging chart. Doesn't look bad at all. And it's probably, you know, one of those stocks that, you know, in the Dow, big conglomerate. That's exciting now all of a sudden, I guess. Vivo. Not bad. Looks like that might have been it for a pullback above the 50. Nice close today. Any follow through tomorrow might be healthy, might work. SOS. I got to say, this one closed below the 50, and this is kind of where I would be really concerned about these things going much lower when they break like that. It's going to have to put a lot of work back in to earn my trust. We looked at KRE, ONT, but we'll look at it for you, the banks. They're still under pressure here, but the FXI, not the FXI, XLF, the financials, for whatever reasons, are looking a little prettier than the banks, but that was one thing I noticed.
Now, the XLF will have the big banks in it, the Bank of America, Citigroup, Wells Fargo, whereas your KRE is going to have your regional banks, right? So you do get some exposure in the XLF.
Yeah, let's see. Is the LC a chart I'm supposed to look at?
Have you done Onto yet?
I thought I did Onto. Yeah, I did Onto twice.
Okay.
Twice. Well, maybe I didn't. Okay. Yeah, I did not. Did not do Onto. Thank you. It's really trying to hang on there. Everything's kind of coming to a head. You got to see where it resolves. If it closes down in this area, I wouldn't want to keep it. That's all I could say there. LC. I think you were talking about that earlier, maybe. Doesn't look bad. Big washout candle.
Yeah, I think if you took something like that, I mean, it does have a chance to bounce. It's a mortgage lender, and the home builders have been doing very well. But I would use that double bottom right there. Below that, it's probably going to drop all the way down to that 50. Yeah. 14.
You want to defend 1460.
No.
Yeah, the steel's all going to depend on that infrastructure bill. That's a good point. Well, channelingstocks.com there bounced nicely off the 50. Bit of an exhaustion wick there today after 3 good days of run, 3.5 days. It might be a little tired, but it's still hanging in there. Any way to search for stocks within specific sectors? You have an answer for that one? Andy, is there a good way to search for stocks within specific sectors? Google.
Well, yeah, the best thing to do is you can go to Google, and throw a sector in there and ask for the top holdings. They're going to give you like all the top holdings and just drop those in a symbol list. Okay, and then you can just create a symbol list and use it in a top list or an alert window. Yeah, it takes a little work to do that. We don't have anything that'll do it for you here, but you can do a symbol that's real easy.
Yeah, you can get it together and make it do what you want, but it's going to require a little work to get in there. XL, somebody, reversal. This thing is at a new issue, so it's way below its a new issue price. Looks like, you know, that it looks like 1380 is a pretty good pivot level. If it can get a close back above 1380, it might start.
Are you missing some data on that one?
Oh, thank you, thank you. Yeah. Yeah.
Not looking as good.
Not looking as good as it did 2 minutes ago or 20 seconds ago there. So, yeah, that's a tough one.
It is.
It's one step at a time there, but it's not looking good, and the trend is not your friend there.
Here's the thing, guys, and I want to throw this out because when Steve and I, you know, looking at these bottom fishing, you know, stocks, we've been doing this a very long time, and if we're wrong, we're quick to get out, just like something on like this XL. If you were to take it, it's in a downtrend. It's in a long-term downtrend, just like that ride we were showing you. The sweet thing about those, if you're right, you can get a huge percentage move out of it. If you're wrong, you just got to get out quick because it's in a downtrend. You're going counter trend, and if it resumes that downtrend, just get out.
And that's the hardest part.
It is.
It's harder for some people admitting you were wrong and having to take the loss and rip the Band-Aid off, and then you start talking to yourself, well, I know the minute I get out of this, the trading gods are going to spite me, and they're going to rally it back up, and I'm going to be forced to chase it.
Yeah, and there's always a reason for me doing it, either technically or like today I saw Tesla having a big bounce and NIO. Unfortunately, I was late to those, so I start maybe looking for some, you know, some similar stocks to it, and a lot of times you can catch them and have a, you know, have a nice move off the bottom.
Nucor is one of them. Yeah.
That's just huge.
Steel stock. All right, a few more, then we'll bring in Scott here. Let's see, Viacom, I think, was next up. Oh, I can see what that one looks like. Somebody had to liquidate a fund, I think, and it broke this thing pretty hard. So, you know, these are always tough to play. You never really know when it's completely wrung out or washed out. You just got to play the bar reversal game and hope that you're right. Not my bag, but definitely could be a low risk entry if you play it tight. Let's see, can we look at, oh yes, POTX and then Solo. I want to look at Solo too, because that's another one of those EV plays. POTX just keeps grinding below the key moving averages. I'll tell you what, if you'd asked me right there, we wouldn't, you know, could have been interesting, but it's just kind of breaking. Solo is another electric vehicle play, and also trying to find some support down here, roughly at the 430 level, 425 level. See how it resolves. They're all kind of the same. Oh, the family hedge fund, is that what it is? That's why I'm seeing jokes on Twitter about family hedge funds not really passing the sniff test of scrutiny.
What are you talking about?
Themselves. Family hedge funds are not supposed to be the same.
Oh.
No, Viacom and Disc A and some of these other liquidations.
Oh, okay.
Some of these family hedge funds probably got themselves in a little bit too much trouble, too much margin.
Ah, interesting.
Yeah, over leveraged hedge funds. They've been, you know, a lot of, when the SEC started regulating hedge funds, a lot of them just said, well, screw it, I'm just going to go to a family hedge fund model. And they did. And then they got even more in the dark doing that kind of stuff. Can you add a column for a sector and sort it in a top list? Yeah, you can always sort any column you want to add. You can add, and then you can sort by that column. All you have to do is just go to any configure menu and go to the column menu and add the column that you want. If you don't see it in there, find it in the search tab and then assign it to show a column. And once it's a column, you can double click and sort it like you would in a spreadsheet. And it's a good way to look at things. Play, that was one that was, I passed up on that one a long time ago. Didn't think that COVID was going to survive these things, but boy, they sure have. It's just been a nice grinding move higher. Got ahead of itself a little bit recently. You know, I would say as long as it keeps a close above the 20-day moving average, that one's probably going to be okay. SQZ, is that a ETF or is that a real? No, it's a biotech, huh? Also under pressure. Did we look at that one already? It looks very similar to the one we looked at a minute ago.
I don't think so.
All right, we'll do two more. CG and then Baidu. and then we'll bring Scott in. All right, first one, again, as I said, was CG. Nice looking trend, nice outside bar today, engulfing bullish candle. I think that's why you said, does it have a shot tomorrow? It very well could. You're seeing this bullish engulfing candle over yesterday. Very well could. And the last one is Baidu. Knowing the China ETF wasn't that strong, Baidu kind of looks a lot like it. Boy, real fall from the grace of the highs back here at 350. Could be close enough for government work there at the 200-day, but it's just I'm going to call it what it is. It's kind of a dead cat bounce right here until it resolves itself. I don't know what you really do with something like that. George made money off the put on Viacom. All right, everybody. Thanks for your input. I'm going to bring in Scott, and he's going to have any announcements. And I think we have a sale coming up, and well, he'll let you know that.
Yeah, thanks, Steve. Keep in mind, we do have a brand new ebook written by our Director of Software Development, Dave Mabe. So go ahead and grab that. TradeIdeas.com/strategies. It's got his favorite strategy indicators and some cloud links in there for you to download and use as soon as you read it. Do subscribe to the podcast so the next time we release a new ep, you're able to get it right away. And then check out the previous episodes we've released this year and late last year. There's some really insightful interviews in there. Grab the code opportunity if you want to save today, 15% off your first month or year of Trade Ideas or an upgrade. And there's a holiday this weekend, so if you have a little patience, you might save a little bit more, but don't tell anyone I told you. And you can find Steve on Twitter's at TISteveG, and of course we have at Trade Ideas Pro is the Facebook handle to like everything that we post. And if you have questions, send it to info@trade-ideas.com. That goes into our help desk. So you're going to get an invitation to watch the replay of this webinar on our YouTube channel with a link to where you can find it on the playlist tomorrow. So stay tuned for that email. Thank you, Steve and Andy. Have a good day.
All right. Thank you all. See you next time.
Thanks, everybody. I'll see you on Thursday.